Good morning, 8/5/2011, dog days of August, and the thing about it is the NASDAQ got whacked yesterday on the opening bell. We opened at 2580. We go up to 2592.04. We drop to the low of 2509. There's your gap off of the unemployment number. You come down, you shake them out. Downside volatility was still in play. People were panic selling on the opening. Once we got down here, equities in the NASDAQ comp, the stocks like the Googles and the Apples and the Amazons and the Baidus and the price lines, and I can go on and on. The list goes forever. But as we were making the bottom here in that big volatility short down, we've come back up, and we're going to look to see how we base. The volatility structure in these markets are the technical damage, which we'll talk more about on Saturday morning's training, is that the technical damage is here. And the price volatility increase is where people have been trading in this last decade. They haven't seen this. 2008, we had a lot of volatility, but people have a very short memory. And you do not get this kind of volatility. You only get this kind of volatility when the human emotion is running at its highest level. The complacency level in 2011 was at all-time lows. There was no fear. Nothing could happen bad. But markets have had a 10% haircut in the last week. That was a huge correction in volatility. And volatility increases. And we talked about market action price volatility would increase. As it was increasing last week, we said that the big move, something huge, was about to happen. Because you do not have increasing volatility without a huge systemic event. Whether that systemic event is good or bad. But it wouldn't matter. What mattered was that we were overbought, the complacency levels were there, the earnings season had come down. Now, this volatility, the way that this NASDAQ burns, is how do we build bases up, and how do we build the base up and take out the highs? Stock market's only been open for an hour and 15 minutes on the opening bell. Let it be known. 8/5/2011, time 7:43 a.m. Pacific Standard Time. Gap on the jobs number, sell it down. They bought it. The round trip, the teeny value on it is increasing at $6.09 per line. This is our application. Each line is calculated before the opening bell. And then there's a transaction between short sellers and long buyers. And we're going to see if we can hold the lows, unlike yesterday, is in the shorter macro is where we get sold out. And we have to base, we have to consolidate and take higher highs. And we have to work our way up, just as yesterday's beautiful move down here at 2620. That meant that this NASDAQ comp dropped 136 points yesterday, and that the fear factor with people in the VIX and the VXN are breaking out and consolidating at their highs. That level, and we'll talk more about the VIX and the VXN on Saturday, but we got to build bases here. If we build bases here, that means that the leadership stocks in the NASDAQ will set up. If we fail here, that means that the bottom up from the equities sell back down, and that creates another short sell. So price volatility within the indexes are going to be at extreme levels that people do not know how to trade. Margin debt selling was at its all-time highs yesterday. And that was part of that 500-point haircut and 136-point down on the NASDAQ comp. Gap it, short it, buy it long. That's the upside. That's the downside. Mathematically, though, you've got to set up and you've got to come back up. So volatility will remain at its highs somewhere in the future here, whether it be today, it's a weekly options expiration. But we'll be talking more about the longer-term weekly technicals and monthly levels on all of the indexes on Saturday morning, MMTs. And on the intraday level, volatility was stop management, entry management, volume management, earnings management, economic management. There are so many things that go involved within these markets, but the most important part of that management is to see how schizophrenic that buyer and seller is in that public tape. They don't know how to act right now. They don't know how to keep up with it. And eventually what will happen is they're all going to get out of the way. And once they're all out of the way, we'll find a bottom in the market when that time comes. Right now, we're not really at that time because it's too early, but this is the opening price action volatility on the NASDAQ comp in the first hour and 15 minutes.